good evening, everybody. How the heck are we on this Tuesday night, October 13th? Okay, so what I'd like to do this evening, if possible, is let's just talk a few minutes. I want to talk a few minutes about the volatility over the next 2.5, 3 weeks. And, there's no, and then what we'll do is, let's toss out some charts, let's find some trades, and, we'll certainly do that. Over the next couple, 3 weeks here, we could have some serious volatility. And I guess what I'm going to do is let me just share you my plans and my idea. And everyone has their own ideas, and please feel free to toss your ideas out there as well, because it might help somebody make a decision one way or another. Starting this week, I'm going to be headed toward cash, or nearly all cash, going into the weekend. I'll trade a little Monday, Tuesday, Wednesday of next week, and then Friday I'll be heading into cash. I also, and I'm going to continue to do that until the election, and probably just shortly after the election, maybe. It depends how crazy that is. And I think what I'm going to do is I typically hold somewhere between 8 and 12 positions. And I think what I'm going to do is I'm going to make a little note here and stick it to my desk where I think I'm going to be in 4 positions max at any one time, just because I don't want to risk a lot of money. I want to keep that risk out. Now, again, if somebody here, please feel free. If you think I'm crazy, if you think I'm nuts, if you think I'm overly concerned, by all means, say so. But please explain. I think all of us, everybody, has the ability to make money trading. But I think where we get in a little trouble sometimes is our losses. And I think most of you know that I really don't care for chop, and I don't really care for drama. I don't like that sort of thing. So the way I get around it is I just don't trade. Yeah, I might not be concerned enough. Let's see, David's doing the same thing. Thank you. So, and it's what, 3 weeks out of our time, out of our entire year. And I'm not saying to not trade. I'm going to trade. That's not a problem. But what I'm going to do is I'm going to limit everything. If I'm in 4 positions and I can't make money on 1 or 2 of those, then what are 10 going to do for me? So I think that would anyway. I think that's a good thing for me, and I think that's important for a lot of traders, just to simply think about, just simply consider where you are, and that's a strategy. Susanna, yeah, cash is a position. Yes, it is. Yes, it is. Glamour Girl, I agree with you. ETFs might be a good answer. Absolutely might be. They're a little slower. They don't move as fast. And, if we have a one stock blows up on you, whether you're long or short, it blows up the wrong way, then you're not looking at that one stock. You maybe, you're looking at a basket of stocks, so that could help. But that is an idea, absolutely. Look at some ETFs rather than single stocks. God, excuse me, right before I came on, I took a drink of water. I think I tried to inhale it rather than drink it. And that didn't work out too well. So anyway, going in, we just want to think of that. I look at this market right now. Nobody can deny that the bulls are pretty strong. I mean, nobody can deny that at all. One thing is we may be getting a little high, and a little consolidation might be needed. Let's see, election results. Yeah, yeah, very true. The decision might not be right away. So this is a crazy year. 2020 is one that is for the books. I mean, this has been an insane year. Totally insane. I think a lot of people learned a lot about themselves this year, and I think we're still learning a lot about ourselves this year. So, crazy year. A lot of things. A lot of things. Yeah, Reggie. No, no, no. It wasn't a peanut butter sandwich. So, anyhow, I just want to be very careful. I also want to be a little quicker with profits, which I'm pretty quick anyway. But I definitely want to be quicker on those stops, take those losses when I need to, and just quit. Just say, that's enough for today or enough this week. Just be in a position where I just don't want to get myself into a position where I think that I have to trade, or, that I'm going to outsmart the market for the election. I certainly don't want to do that. That just, I had somebody email me this afternoon a list of stocks if it was a Trump win, and a list of stocks if it was a Biden win. And you know what? If that turns your crank, okay, you can do that. I don't know how you're going to decide, but me, I think I would rather just take this 3 weeks and kick back and sort of enjoy it. Still going to trade, but enjoy it. So, all right, really, there it is. That's my plan on how to trade the volatility going forward until this whole election thing is over. RC, yeah, if no one wins. Okay, so I want to look at this chart, the SPY chart here, and I want to go to a 3-bar chart. I've been talking about this for a few days. I've mentioned it in my YouTube posts. I've mentioned it in my Twitter posts. By the way, if you're not signed up for YouTube or Twitter and would like to, you certainly can. If someone doesn't know the address, I can get it for you real quick. But during the day, I've been posting a little bit on Twitter, and if you can't be in the room, that might be helpful. It's kind of hard to do YouTube posts for quick, this stock, that stock, another stock. YouTube posts we do in the morning, the morning blog, look at some trade ideas, my views on the market. But Twitter posts, they're just real quick, real short, no videos. I've never done a YouTube video or a Twitter video, just some quick posts. So it's very worthwhile. If you're looking for something and you can't be in the room, sometimes you might find something there very interesting and very worthwhile. So, yesterday's close, or yesterday morning, this morning, I was looking at this 3-bar chart, and a 3-bar chart is simply 130 minutes is all it is. And, trying to figure a chart out with this is really helpful. I find it breaks down a candle. For instance, if we take a look at yesterday's candle, what does that mean? What does this suggest? We have this gap up, bulls are in charge. Nice big bodied candle here. That looks great. And then we have this wick up there that's fairly good size, all things consider. Fairly good size. And so what does all that mean? Well, we're going to go to this 3-bar chart. Stands, I sure can. Let me, here, just, if you type in, let's see, Sadler / Twitter. That'll you'll find it right there. And then if you just type in Rick Sadler YouTube, you'll find it. You'll find that right there. Okay, if you just do that. Hey, Stalker, how is Stalker? Stalker. Where is she? Where is she? Somebody in here I want you to meet. I don't know. You guys might be in the same neck of the woods. Lee and Stalker. Lee, go say hi to Stalker. Stalker, say hi to Lee, maybe. You guys might be in the same neighborhood. Maybe. I don't know. We'll see. There we go. There, Lee's doing it there. So we're looking at yesterday's candle. What does this wick up here mean? And you can go to a 15-minute chart and you can try to figure all that out. The problem with a 15-minute chart is I think there are too many candles to work with, too many candles to try to figure out. But I think if you go to a 3-bar chart, I think it's much, much easier. So the recent 3 candles, that's today. These 3 candles are yesterday. And since Candlesticks is all about a candle, and then it's about follow through, whether it's the next day or whether it's several days later. It's also about candles that break down. And if we just use this candle here, if we have follow through, or if we have a candle that remains inside that first bullish candle there, inside this area, there we go, inside this area here, then we look at that as being somewhat okay, kind of a neutral situation. Something bullish, and if it stays here, it's not bullish, it's not bearish, it's just neutral, it's not falling apart. When we have a candle that breaks out of the top of the first candle, we look at that as being bearish, and if we have, bullish. And if we have a candle that is trading lower than the first candle's low, we look at that as being bearish. That's really what candlesticks are. I mean, they're boxes that stack one way or the other, or they could stack sideways as well. If you want to stack them sideways, you can. If you want to stack them up, you can. Stack them down, you can. Anytime you get candles stacking up, we're going to look at that as bearish. And if we have a sell signal that is maybe inside, or I should say just a bearish signal, not a sell signal, we look at that as maybe something cautionary, and we're not going to get too excited about it unless it closes below the previous day's low. If it wants to stay inside that little channel right there, it's kind of a neutral situation. Now we're going to wait for one of 2 things to happen. We're going to wait for the bulls to come up, or we're going to wait for the bears to drop it to the downside. The thing of it is we've got to wait all day for this. You can look at an hourly chart. The problem I find with these faster charts like that is they give you too many candles to look at it and it becomes nerve-wracking, because I'm going to make the assumption here that everybody here trades from a daily chart. Now, if you don't, then this might not mean anything to you. I don't know. And if you trade from a daily chart, a 15-minute chart, looking at that just gives you, it's just way too much information. An hourly chart is way too much information for looking at that one candle. However, if you break it down to 3, I think that gives you what I think is nearly the perfect information for that candle. So for instance, yesterday, we had the first candle gapped up today for the first third of the day. Went great. I mean, go bulls go. They're rocking and rolling. The second candle worked out just perfect. Just absolutely perfect. And then the last candle of the day, or the third candle of the day, not so good. But really, it's very telling. Now remember, this is what yesterday's candle looked like. A good candle, good body, low wick, but the wick on the top was maybe might have made you concerned because it was a little large for what we wanted to see. I think when we see little longer wicks at the top, we get a little nervous. Well, it's a very simple thing. Remember, candles are all about stacking. So here, and you can use the wick if you want. You can use the body if you want. I don't really think it makes a whole big difference. I really don't. But if you take yesterday's last candle and treat it just like you would a daily candle, it was very simple. This is exactly what I pointed out this morning before the market opened in the trading room. If the market, if the SPY, if it opens up, doesn't matter where it opens, if it's up this direction, however, then we're going to look at that bullish. Why? Because we're looking for candlesticks to stack in a bullish way. Now, if it opens up to the downside or we trade to the downside under that line, once again, the candlesticks are stacking. But they're stacking in the direction you might not want it to go. Or maybe they're stacking in the direction you want them to go. Maybe you went short. Well, that's working out for you. It's very, very, very simple. So tomorrow, here, let's don't make another one. Let's just move this one down. So tomorrow, let's just wait and see what happens in the morning right here. Now, you don't have to wait a full third of the day. I mean, you'll know in the morning. It's just like right here, that little arrow there, that's where it, probably just where it kind of popped up when it closed here. So what we want to see is if you're bullish, you want to see this start trading this direction. If you're bearish, you want it to start trading this direction. It's very, very, very simple. And it's also, because candlesticks are, there's most, not all, most candlestick patterns require 3 candlesticks to work. And when we start looking at this, you can see how those 3 candlesticks are starting to work together. So if, say we put our first part of tomorrow in, or even the first, it could be the first 10 minutes of the day. It doesn't have to be the third bar. But the first 10 minutes of the day, if we were to do something like this, we now have a morning star signal right in here. And if we do something like this, all we've done is continued our trend to the downside, and we've continued our stacking south. Okay, so it's just it takes a little bit of getting used to looking at a 3-day chart sometimes. But if you just take a look at those candles and see how they work, I think you'll be pleasantly surprised. And I think right now in the SPY, this would be a good one to go look at. So 1, 2, 3, that's today. 1, 2, 3, that's yesterday. 1, 2, 3, that's the previous day. 1, 2, 3, 1, 2, 3. Look at this. 1, 2, 3. This is how we opened. This is the first third of the day. That was midday. And look what happened. What does that tell us? It tells us we better pay attention to what's going on. Something is changing. To be long this, what would have to happen? We're going to have to get through that candle right there. If you're short, you want to get down to the other side of it, the low side of it. So I would be very hard pressed to be long on this candle. This candle I could possibly see being long. I'm not sure that I would want to be long at the end of the day on this, but the very next day, that would have been the time to start looking at this to the long side based on the 3-bar chart. Anyway, I honestly feel they break down the day's candle so you can see it, and it doesn't do it in a way like a 15-minute chart, in a way that it's over dramatic. A couple questions here. Let me go grab them here. David is saying, thanks for using the SPY. I'm a futures guy, new to this. Cool, David. Then you might try that 3-bar chart. And I don't trade futures, so maybe you could give a shout back on what you find. That would be terrific. Thank you. Let's see. Emily is asking, what about Josies? Do they mean anything different? Not at all, Emily. And it does not matter what chart you're looking at, a 1 minute, a 5 minute, 15 minute, 130 minute, or 3-bar chart, or a daily chart, or a weekly chart, or a monthly chart, or a yearly chart. Doesn't matter. A doji is a doji. A bullish engulf is a bullish engulf. Bearish engulf is a bearish engulf. Candlesticks have the same meaning on any time frame, and you treat them exactly the same. So, an example. Doesn't matter what time frame you see let's make this a little, there we go, an engulf, okay? Does not matter what time frame this is on. We're going to trade this exactly the same. The truth is, the way to trade this, by the way, is you have your candlestick signal here. You trade it on follow through, so on a breakout. That's the correct way to trade it. Now, I know, and I do this all the time. We start to see a pullback here, and let me change that color. I'm going to make that, we'll do this, kind of a neutral color. Doesn't matter if it's green or red. So if I see an inside day like this, I'm not going to go after it this day necessarily. I'm going to wait till I have a bullish candle that trades above it. Doesn't have to break out, but it has to trade above this candle. Remember what we want? We want candles to stack. And if you're bullish, you want them to stack up. You want them to stack going higher. And stacking is when we start seeing new highs there. That would be, even though the bottoms aren't sitting on each candle, we're looking at those tops. So it could be, if the bottoms are up there, well, the tops are up there. But I'm looking for those tops to stack upwards, so to move up higher highs. Pretty simple. So, and a lot of times you'll see something like this, and then you'll have that maybe a gap down green bar. I probably won't chase that, but what I will do is if we start moving up above that candle, that's where I start looking in. But the proper way is to wait till we break out. That is the proper way. Nobody does that though. Everybody wants to get in on the early side. I get that. These are clue candles. I hear all the time, and I used to also say this, reversal candles. They're only reversal candles if you have follow through. If you don't have follow through, they're not reversal candles. So let's go ahead and use the word reversal, but let's add the word clues. Reversal clue, not a reversal candle. A reversal candle means, to me, that would mean that we've been in this downtrend and you have a reversal candle. No, you don't. You've got a reversal clue is what you have. You don't have a reversal until it shows follow through. And we stay above that candle. That's what we want to look at. On the 3-bar chart, it makes it so you can trade during the day, and you don't have to be looking at 5-minute, 15-minute, hourly candles. I mean, I hardly ever, you guys, when's the last time you saw me look at a 5-minute candle? I just don't do that. I will look at 15-minute candle, especially on the market SPY, the indices, VXX. You'll see me do that often on those, but I don't usually do that on charts. I will look at hourly charts sometimes. On charts, but nah, I will look at 130-minute or 3-bar charts all the time on these. And it's just because it helps me with entries on charts. It helps me with the way things might play out. So if this is my first day, my first bar, here's my second bar, man, I start to see this bar here if I wasn't in this stock, and I start to see this bar, and this bar started to move up. Man, that would be a nice little buy right there based on those 3 bars. Because here's our move up. This is our, we'll call it our rest day. I mean, it actually, or rest bar, it actually, it actually closed up, but it also dipped down to an inside day. Now this could be that extension that starts to extend it upwards here. So say tomorrow we do, we open up and we actually come up here, the first bar. And let's say it just hovers around that area right there. Now, I know there's going to be a lot of people buy that. I might as well. But the reality is, until this, we see that follow through, we really don't have a trend change on this. The same thing here. We really didn't have a trend change until we started trading below this candle. Otherwise, it's just a noisy day is all it is. Let's see, let me grab some questions here. Let's see, Terry, I use 195-minute, that could work too. Take trades on positive candle near the end of the day. This looks even better and has good logic. I agree, that would be, I agree to what you're saying right there. Looks better. That's, difference between you and I maybe, but I do agree that the 195 half day is a great way to look at it. So, and I get it what you're saying, trading the second half of the day. So if you have, say on your half a day candle, if this is the half a day candle, now you've got the warm and fuzzy feeling that this candle lasted all day long. So the bulls, they were knocked down here at the open, but they're holding up here that half of the day, half of the first half of the day. So if you see the second half of the day start to move up, that becomes an excellent place to be buying right in there. So I totally agree, totally understand what you're saying. Absolutely. Let's see why. I was experimenting with the 65-minute candles. This is very clear and less noisy. Thank you for explaining it. You're very welcome. And I urge you, try Terry's 195 as well. And look at the half day. And don't take 2 minutes and look at it. Look, we've got what? 3 weeks? Is that about what it is now? I guess 3 weeks. Where I would rather do education. I would rather read a book on trading. I'd rather watch videos. I think I would rather do anything but actually risk my money. So this might be a terrific time to take advantage of. Just take a whole day. Look at the 195 maybe minute, the half day chart. Look at the 130 minute, the 3-bar chart. And make sense of it. Just look at different charts, different ticker symbols, and just see if you can make sense of how they move. Where you might buy, where you might put your stop, things like that. Let's see. Emily is saying, I feel like I confused myself by switching between time frames. Is there a way to stop second guessing myself? Yeah, first of all, stop switching between time frames. And there is an absolute way, okay? And so let's let's take a look at this WPM, and we'll take a look at we'll see if it doesn't look any better. Let's stay with the 3-day daily chart. So I bought this today near the close, not right at the close, but late this afternoon. So, Emily, thank you for posting, by the way. So if you want to stop second guessing yourself, probably the number one thing you could do is very, very simple. When you find a chart you want to trade, and that is a conversation in itself, okay? But when you do find that chart, simply do some writing on the chart. You know, I like to say things like this to myself. Why do I like this chart? Well, I like this chart because we've got a double bottom or a low and a higher low, whichever you want to look at. I like this chart because it rallied up and it broke out of these candles right there, these candles here. I like that chart. I like the bullish candle and I like the 2-bar pullback here. I like the hammer. I like the long wick here. I like the fact it's still holding onto this candle. So I think what I'll do is I'm going to put my stop about right there. So let's just color this red for a stop. Okay, there you go. So I'm in here. There's my stop. Now what can this chart do for me? So I'm thinking maybe this high up here. And that right there would be my trade. Just doing that. And that took me, you see how long, well, you saw how long it took me. It would take you about 3 seconds to do it if you didn't talk through it and all that. If I just sat here and just did it, it would just be bang, 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 all done. But if you do that, I think that will take away that second guessing. Okay, so suppose you're wrong and you get stopped out. There's nothing wrong with that. Look, it happens to everybody. So you get stopped out. So you buy another chart, different chart, but let's say you get stopped out again today. You know, let's say tomorrow you get stopped out on this. And maybe midday or something, you get stopped out on another chart. Maybe on the end of the day, you get stopped out on another chart. Okay, stop right there. If that happens at 3 of them, and you might even do this at 2, but if it happens, just stop everything. Take a breath and figure out what's going on. Because you shouldn't be wrong that many times in a day. There's something else going on. For instance, maybe the overall market is doing this, but you're so wrapped up in your trades, you're not paying attention to this. You can see it, you've looked at it, but you're so wrapped up into the trades, you don't take it in. So if this happens twice, or stretch it to 3, maybe, but don't go past 3. But if this happens, just stop. Take a breath. Get up and take a little walk if you want. You know, shake it off a little bit. Relax. Come back and figure out why. One of the first things to do is take a look at the market. Take a look at the market. No kidding. I had a couple of people, they can't understand why today was a down day. They think we should be going up. I cannot convince them that this market is so overbought. It's insane. Why would you think it should go up? But they do, and they can't understand why today went down. They couldn't understand why they put trades on and they're losing money. It's very simple. What is the market doing? They were so wrapped up with their trades, they were not looking at what the market is doing. Okay, so sometimes you can be in the best charts in the world, but if there's a hurricane coming, you're going to get some rain and wind, and it's going to punish those charts, whether they deserve it or not. So anyway, that's something to do. Glamour Girl, you say you mean wait for confirmation. I'm going to say yes to what I'm not sure what chart you're talking about there, but your statement is a very good statement, and I'm pretty sure I can say yes to it. Wait for confirmation. Yes. Let's see. Judy's asking, Rick, do you use the 130-minute chart on indices only, or use them on anything? And let's get down. Let's answer these questions, and I hope we have charts we can look at. I hope you guys post out some charts, and let's look at that 30-minute or 3-bar chart. Let's try to use it to make sense of the chart. So use it on any chart you want. Yeah. Hi, Terry. How do I find, let's see, how do I find a daily chart broken into 3 bars? Well, if you use, well, it doesn't matter what program you use, but you want 130 minutes, breaks it down to 3 bars. So these last 3 bars are today, and just 130 minutes. Whatever program you use, I'm pretty sure. I can't imagine any program doesn't have that nowadays. No, doll, I'm not. How do I say this? I have a long-term account, but I don't share it. I don't talk about it. I don't do anything with it. My long-term account is I buy and hold. That's what I do. I don't try to trade it. So for the next 3 weeks, no, I'm not going to trade long-term. What I'm going to do is I'm actually going to do less trading. I'm going to risk less money. I think going into next week, I might. It seems to me that 4 seems good to me. I may be in only a max of 4 positions for the next 3 weeks at any given time, and I typically run 8 to 12. So I'm all about slowing things down till after the election. I'm all about risking less till after the election. Hi, Lauren. How are you? I've been looking at the 3-day chart and trying to do some longer term trading. Yeah, you know what? Let's just stop right there. I don't think the 3-day chart's going to help you do anything longer term. I think you're making work out of a chart, and I don't think it's going to do anything for you, Lauren. I really, really don't. Not for a longer term. Might I use the daily? I would. If you're going to use longer term, I would use the daily. And the truth of it is, maybe consider the weekly if you're going to do longer term. Yeah, I would strongly consider the weekly for longer term. Hi, Scott. Do you have thoughts using the VIX to time entries on the SPY? I think that's, well, wait a minute here now. To time entries on the SPY, I think it can help you, okay? On one of my monitors, I've got half a screen, well, kind of like this half a screen over here. And one of those I have the SPY, and one of them I have VXX, like this. It's over on my monitor on the right-hand side. And I keep them set and 15 minutes right here. So I won't use them necessarily for timing, maybe as perfect timing, but what I will do is if I see the VIX, look at the VIX now. See, the VIX is way down here, and see we have what could be an evening star on the SPY. I'm not concerned. I'm not going to short this because I don't have any fear over here. Now, if I was to have some fear happening, or maybe it's been building, throughout the day, something like this, maybe we've pulled back and tested, and now we're showing some follow through. Now that's a different story. I see a sell signal appear. I'm absolutely going to consider that as a trade. So as far as timing it perfectly, no, but using it to help you, yes, absolutely. Let's see, June Snow, is a 130-minute chart for day trading? If no, what time frame are we looking at? Well, we're looking right now at the 130-minute chart. You can use it for day trading, I suppose, but we're not doing day trading. We're swing trading. But if you want to day trade, I suppose you could. For instance, here's how the SPY ended, and say you wanted to trade the SPY, you wanted to day trade the SPY. If I had my first candle look like this during the day, then what I'm going to do is be long if we have follow through over that candle. So this third bar of the day, if it started moving up, I would be long. And let's back up just a little bit here. Let's erase all this and let's put this up again. So we're over this candle. For day trading, I might be long above this candle. And then if we had follow through, or maybe just a slight little, okay, there's the second half of the day right here. And if the third half of the day started to break out like this, then I could see that as a trade, and you might use it for day trading that way. I think most people that day trade use faster time frames, much faster time frames for day trading. But like I said, I suppose you could do it. There you go, stalker trick. 1 minute, 2 minute, 5 minute, 15 minute, 60 minute for day trading, and maybe daily, weekly to find charts in good positions, and then use those faster time frames to place the trade. David is saying, I use an entry chart, the 4-hour, and anchor chart, the daily chart. Yeah, I think a lot of people do that as well, David. They'll use that daily chart to find that good trade setup, chart pattern, then use the 4-hour chart maybe for an entry. Get you a little earlier entry maybe. Until one is expert at using the daily, I would not add confusion based on a 3-bar chart. I agree, RC. Totally agree with that. Or the 2 or 3-day chart. Just my 2 cents. I totally agree with you. Look, I want to talk a little bit more about that, because RC speaks the truth here, big time. And if you are if you just started trading, if you're a struggling trader, looking at a 3-bar chart's not going to help you. It's not going to do anything for you except maybe help you lose money faster. Bottom line, if you can't trade a daily chart and be fairly consistent, make some money. I'm not saying trade for a living. I'm not trying to say, go buy a car with your winnings or a boat or an airplane or anything. I'm just saying make some money. Be somewhat consistent. If you can't do that on a daily chart, messing around with different time frames is just going to screw you up more. That's just a bad recipe right there. So thanks, RC. Appreciate it. Totally agree with that. Stalker Chick agrees with that. Let's see, Duffrick, how long on average is a holding period for your trades using this time frame? 2 to 4 weeks, more, obviously not intraday trading. Duff, thanks for asking. Let me take a few minutes and let me explain this, okay? The first thing is, my goal for 2020 is to double my money, all right? So I have my dollars and I want to double my dollars. I don't care how much you have, unless you have a crazy amount of money. If you have over 100,000, then maybe we'll talk a little different. But anything under $100,000, whatever you have here under 100,000, I want to double it. All right. Now, so you're saying, how long do I hold it? First place, I can't predict how long I'm going to hold it. I don't have the foggiest clue. I have absolutely zero clue how long I'm going to hold a stock. Zero. What I do have a clue of, however, is if I want to double my money, what I've done is I've divided that by 243 days, because that's how many days there are in a 12-month period to trade. And that tells me how much money I need to make per day. Okay? So let's say I buy this stock chart, whatever you want to call it. I buy this. And let's say it moves up and it equals two times what I need to make. What I'm going to do then is I'm going to sell half. Now this is a perfect world, okay? Not every trade works out this way. So again, I know how much money I need to make per trade. When I double that amount, I like to sell half, and then I still have half. Then I can allow it to move up or back or whatever is, until I want to sell the other half. So, can this happen in 2 days? Yes, it can. Can this happen in 15 days? Can it happen in 3 days? Yes, it can. I will say this, that I work very, 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 very hard on looking for charts that move up as quick as possible. I wish I could get it right 100% of the time, but I can't. But I work very hard on that. So I'm in a stock, I'm out long before most people are out, but I've made my money. So I might be out in 2 days, 3 days, 4 days, 5 days, things like that. I'm holding CZR right now, and I've been holding it now for, I don't know, I'd have to go back and look, but we might be pushing 8, 9, 10 days maybe. I'm waiting for this, and it did not go the direction I wanted to go. Did not at all. But now it may be starting to reverse here. So it may take another 5, 3 days. How do I know that tomorrow it's not going to do this? Now I'm I'm a little wishful thinking here. But what if it did that? I'd be out of this thing so fast tomorrow your head would spin, because I would meet my goal. So it's not about how many days the hold period is. It's about what the stock does for you, is what it does. Good question. Thank you very much. I hope that answered it. And if it didn't, ask me in another way maybe. Hey Rick, or RC. Let's see. As much as the market is up, but it is a broad rally. RSP, RYT, what do I think? Let's take a look. Thank you for those, by the way. RSP. I think nothing until we get a bullish candle. However, I think that's a very, very nice chart. I think that we've pulled back, so we have a nice trend. We've pulled back here. All we need now is follow through. And to me, the perfect chart pattern, the absolute perfect chart pattern is what you've got going on right now. You've got a stock that's up. We broke out of this resistance right there, and we've pulled back to what is now support, was resistance, now support, resistance here as well. Now what we need is that bullish candle to tell us the bulls are back on the path right here. And yeah. And what was the other one? RYT. RYT, same thing. Here we've rallied up, and you look at this chart, we've been up. To me, it's just wrong. Absolutely wrong to trade a chart that's up as many days as this is up. 1, 2, 3. Yes, 3. 4, 5, 6, 7. And this would be 8. higher lows. To me, this is just wrong to do. It's just not right. So this is one reason that I'm extremely cautious right now, and I think it's insane to be trading right now. I'm not saying that we can't go up higher. We certainly can. Although I think we need to respect that top right there. We certainly can go higher. But boy, I've been doing this for almost 34 years now. That's just wrong to trade, to continue to trade long when we just keep moving up like that. We need a rest. So anyway, there's my 2 cents. Emily, Glamour Girl, I'm just not sure what you mean by yes, spy. So, Emily, UA, I placed a trade today. I think I know a couple other people that did the same thing. Trade today, of course, it dropped in value. Emily, I'm not at the very bottom. I'm going to ask you a question. You can answer yes or no if you want. I'll get to it. But are you one of these traders that when you buy a position, you expect it to do nothing but go up? I hate to be the person to burst your bubble. I really do hate to be. But that's never going to be the case. Not ever will that be the case. What will be the case is more like what just happened here. You buy it and it dances. It moves up and it dances. It moves up and it dances. I guarantee you that is the way it's going to be. So let's look at the 3-bar chart here. You've got a very nice breakout. Here's resistance. You've got a very nice breakout today, right? You have follow through, and now you have a bar that's testing the breakout. If this was a daily chart, okay, and that same thing happened, so let's break out, let's consolidate, and let's go ahead and put a bar in here, put a little wick on it, because I think that bar had a little wick on it. Would you be equally as negative, and I'm not saying you're like super negative, but you're pointing out that it dropped. So if you bought this breakout and it pulled back, would you still feel the same way, or would you say that this is testing the breakout? Go back to the 3-bar chart. We are testing the breakout. So tomorrow, it's pretty important how tomorrow's candle handles all this in here. And I think we can safely put a trend in here. The trend is still working. You can still see that we've broken out. What we need to see now are the buyers. And honestly, I'm going to make sure that's a little lower, and I'm going to drop this down a little bit. Give it a little room to work a little bit. But right now, I still think that's a fairly good chart. We're just in that test process. And it may take a little bit to move sideways before the bulls get interested in it. Now, let's look at it. Let's think about another side here, all right? Now, as you can tell, that I'm not bearish on the market, but I'm just as scared as can be. I'm a chicken. I think the market is overbought something fierce. So, take that in consideration. If the market starts to tank or drop, tank might be a hard word. If it starts to drop a little bit, do you think it's going to pull your stock down just because the market's moving down? I think so. So when we're buying charts, make sure the market is in your favor, not going against you. Personally, right now, I feel the market's going against us. I cannot stress to you or everybody here, the important thing is not making money. The important thing is keeping your money. Making money will happen. It will come. The trick to trading is keeping your money. So you want to put everything in your favor. So anyway, back to this chart, Emily. Right now, what I see is a breakout and a test. You do have a evening star setup here. So if we start to see follow through the downside, then that would tell you that this chart is not ready to go up. And it might want to pull back to these lows, and that might be more than you want. I don't know. Below 11 might be, around 11 might be your breaking point where you put your stop. Maybe your stop's down here, but it might need to consolidate if we see follow through on this evening star here. Anyway, thank you for that. Nice chart, by the way. I know a couple people that bought into that today. Stalker's saying that the SPY has a 15-minute sell, which I think right now it has the 3-bar sell too. I'm still in sell mode. Here's a I would say almost perfect, almost perfect evening star setup here. So I totally agree with Stalker. Here we've got a high, a low, a failed high, a lower low, a failed high, and we're set up to make a lower low or maybe test that low. Now we're getting to a point where we have a gap down here. Sorry, I don't mean to rain on anyone's parade here, but not exactly looking great at the close today. Not real great. Let's see. Lately, we're not seeing VIX and the SPY going opposite each other. Sometimes they go. I know, and that's kind of weird. And the one thing and I look at VXX because I trade VXX, but we don't have anything bullish here over this 22.25, and it's just because of the chart pattern here. Over that, I think we've got some concern. Under that, I think we have noise is all. But over that, I think we can start having some concern. Let's see. David, day trade the ES, future equity, not SPY. Okay. 5-minute, David. Amen, Rick. People are trying to move to faster charts and lose. Absolutely, David. RC said something earlier that I thought was absolutely profound and worth repeating. I think David is also saying something absolutely profound and worth repeating. People that have trouble trading daily charts, what they do, I'm telling you, and there's not a soul in here can tell me that you have not done this. At times, everybody has struggled, and when you struggle, what do? You go to faster time frames. To me, that is the worst thing to do. The absolute worst thing to do. All that's going to do is help you lose money faster. Totally agree, David. Thank you very much. Let's see. Hans, hi. Whenever I hold a position, it drops. As soon as I sell it, it goes back up. Yeah, that happens. That happens. You know, Hans, I'm thinking that if that happens to you, I'm kind of thinking that a couple of things you might want to do is find charts that are closer to support maybe. For instance, DVAX gapped up here. You don't want to buy stocks like this up. You want to buy stocks more near support. Like this might have been a buy. I generally only buy on bullish candles. So let's put this line right there. So we have this candle here and see how we gapped up. We have this morning star type signal. That to me is a bullish scenario. So this candle can be bought, this candle can be bought, this candle can be bought. Of course, all these others can be bought. And now you want to put your stop in there. So I think you're buying close enough to your stop. And I can't say this is what you're doing, but you don't want to nickel dime every penny. You don't want to put your stop, say you buy this candle today near the high, you don't want to put your stop right here. You want to put your stop down into here. You want to give it some room to work. Let's see, buy closer buy on bullish candles, buy good chart patterns. And good chart patterns to me are charts that rally up and pull back, and then you get that buy signal, totally opposite colors, that buy signal, and this would have to be near some kind of support. So the candlesticks would have to be up like this. Maybe we have a down one, and then we have that breakout, and then we run higher. See, that's resistance, that becomes support, and now you buy close to that support. Anyway, that might be something you might want to work on, and I can't say that's the issue, but I've seen people say that, I've said that, and that's usually the answer. Hi, Gwen. Let me grab some water here real quick. Thank you. What kind of goal would you set with a portfolio of 100,000? Would it be hard to double in a year? The more money you have, the harder it is to double. It really, really is. But it's not necessarily that hard. What you have to think of is you just take your dollar. Whoops, wrong one. Take your dollars, and I think there's 243 days in a year to trade. 243. Now you may disagree with that, change it. There's no right or wrong there at all. It's how many days are there to trade? Take out natural holidays, take out some vacation time, some sick time, things like that. Figure out how many days you're going to realistically trade, and then just divide it into your dollars, and it should give you your dollar amount that you need to make per trade. Per trade. Now, I'm not saying you're going to make that every trade. In fact, some trades you're going to make less money. Some trades they're going to be losing. That's why, and when the stock moves up, I want it to go up. When it goes up double, I take half the money, and then I try to let the rest of it work out a little bit better. Because what ends up happening is instead of making one goal, then what I might make is 2 goals or 3 goals. People in the trading room have heard me say, hey, look, I'm making 4 goals on this trade. So that means that I may have eaten up one of my losses or 2 of my losses, and I'm ahead of the game. Well, all I have to do is you know what? Earlier I said per trade. That's per day. Per day, excuse me. I misspoke. I said per trade. You want to make your whatever dollar amount it is, you want to make per day. And Gwen, you've been here a while. I've seen some of your trades, and I'm pretty confident you can make your goal per day. Now, you may not make it on a Monday. You may not make it on Tuesday, but you may be holding multiple positions, which I'm guessing you are. Then on Wednesday, everything might go perfect. And now trades you bought Monday, maybe trades you bought Tuesday, maybe you bought something early Wednesday, they all work out for you. On Wednesday, you've got 1 loser, you've got 5, 6 goals that you've made, and you're well ahead of the game. Well ahead of the game. It's that simple. And this is exactly what I did when I started trading that Road to Wealth account in January 2018, and we took $5,100 and it reached a high of $78,000 in less than 30 months. And it was the same process, the exact same process. So say I'm looking at this chart and somebody says, well, I have a target of $6. You know what I say? So what? Good for you. If I buy this chart and it moves up here and I can make my goal 2 or 3 times, I'm going to take my money. You bet I am. Because my goal is to double my account. My goal is not to pick a top and at the top of a mountaintop scream that I called it, big man on campus, woo woo. That means nothing. I want to make my goal. So anyway, I think you can absolutely do it. It is true, though, the more money you have, the harder it is to double an account. Very, very, very hard. And one of the probably one of the main problems, is you've got to invest so much money. If you have a $1 million account, to double that, each position has got to be so big that you got to have some big ones to trade that kind of money. That's just, I think, crazy. But if you had $1 million account, could you, say in 2 years, add $500,000 to it? I think so. 3 years, $500,000? Sure. Where else are you going to do that? So I think you can do well with it. Glamour Girl, I've changed my goal to this double my account. Brilliant idea. I was leaving money on the table. I will follow this goal, Rick. Thanks. You're very welcome. Open my eyes. We should talk a little bit more, okay? Yeah, we should talk a little bit more about this. It's a great theory. And I have proved that it works. But there is a but, okay? You have got to focus on charts. You have got to focus on charts. You have got to be able to look at charts and I'm going to use this word predict. God, I hate using that. But the reality is this is what we do all day long. You've got to look at this chart. Now, let's forget that this gapped up. You've got to look at this and say, okay, because of this Morningstar signal, because of this pop out of the box chart pattern, I'm going to take the risk and buy this because I have I'm confident that this is going to make me money. Now, nowhere does anyone know it's going to gap up, but I'm confident that this chart will make me money. And you've got to be able to spot those. You've got to really understand these charts, and the charts have to be your life. I spent, over the years, good grief, I don't know, I can't even begin to tell you how many hours just looking at charts, trying to figure out, why did it do this? Why did it do that? And it takes, you've got to work at it. It's not easy, but it can be done. Duff, okay, so you're talking being safer and trading stocks with no time constraint versus options, just clarifying. Let's see, let me read that again. So we are talking being safer and trading stocks or options, doesn't matter, stocks or options with no time restraint. What I'm saying, Duff, is for the next 3 weeks, why don't you take a vacation? Why don't you hook onto your boat and go boating? Why don't you hook onto your camper, go campering? Why don't you go out to your garden and do some gardening? Why don't you replace the roof on your house? Why don't you do something the next 3 weeks that will be less risky? That's what I'm saying. It's really, really weird how this works out, but it makes a lot of sense. Those that make money in trading, they know when to pull the plug. They know when to say, I'm done. I'm taking a day or two off. Or in this case, maybe 3 weeks off. Or trade so much lighter. I want to stay in the business. I'm going to be here every day. And I'm going to place a trade here and there. But I'm going to trade so much lighter, so much less risk, because we don't know what's going to happen tonight. And I don't care what political side you are on. This is the most idiotic, insane, ridiculous, stupid election that you might ever see in your lifetime. Why would you want to be out there? It's insane where we are right now. And then let's if that's not enough, let's throw some COVID on there. Oh, yeah. Why not? We need more, don't we? So all I'm saying, it doesn't matter what you're trading, stocks or options, why not go replace the roof on your house? Like I said, do something where you're not going to lose money. That's what I'm trying to say. Use proper risk reward. And here's what I'm going to do. I'm going to trade a lot less going into the next 3 weeks. A lot less. Can you review the chart for? Sure can. Man, I see a lot of people on Facebook talking about this. I really don't know why either. I honestly don't know why this is such a popular stock. I honestly don't know why. But it is. Facebook, people are tripping over themselves over this stock. And I can't figure out why. Okay, so here goes. Let's get rid of this. So right now, I think we can safely say that it's, for the most part, trending up. Look at a weekly chart. You can clearly see it's trending up, okay? Let's look at the daily chart. And what do I see here? Let's go. I see a bottom, possible bottom. And I'm going to put it right here. Yeah, well, I'll put it right there. And I'm going to go to a 2-day chart, 3-day chart. Nope, I'm going to go back to the daily chart. And then let's, no, I'm going to go all the way up here to the top, okay? You know what I would do with this chart? And I'm assuming you're looking long. Unless you tell me different, I'm going to look long. And here's exactly how I would trade this chart. And I will, if you want, I'll write this down and I will trade it like this, absolutely. I'm going to put a buy box right up here. And when this chart does this, if it does this, boom, 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 I'm going to buy right there. Now, I'm pretty confident that's not what you wanted to hear. I'm pretty confident of that. According to everybody on Facebook that is tripping on themselves over this thing, and I do not know why, but they are. Why would anybody want to fart around with this thing down here? Why would anything want to play with this between here and here? What in this chart makes everybody think it's such a good chart? I will never figure this one out. And I have watched for several days now. Facebook is just, everybody wants to trade this stock. I don't know why. Wait till it breaks out, let it pull back and test, and give us a buy signal. And I'll tell you what, I'll write that down, and by golly, I will prove my point. Okay, so anyway, that's what I think of Workhorse. Ouch. Hang on for a second. Oh. Let's see. Equal weight SPY, RT equal weight NASDAQ is what I meant by pointing those ETFs. And, there's still charts to me, RC, and they are still overrun, I think. There's still charts. Let's see. Futures. Don't trace futures. Please look at PayPal. Sure. PYPL. PayPal. Nice little move today, although it's having a little resistance issue here, so we need to make sure that it can stay above that level. I'm going to come over here. So this is the level that I'm interested in, this 204.10. So this is the level we need to stay above. Here's our 3-bar chart. Here's our breakout. Here's our doji. Here's our continuation pattern. I'm not sure that we've got a good test yet. But with that said, here's what I'm gonna go all the way down to that low, and I would look for a buy in this area. And what I would really, really like, which you might not want to see, but I would like to see this pull back and then look for a buy in that area there. But right now, I would have to say that's a buy in that box right there. We're going to have to put a line up here, and that is the max trade until it breaks out. Max trade. So this might be a good buying area, but you're going to need to break out to make any real money. Reggie. GRWE. GRW. That's not right. GRWG. GRWG. There we go. Something similar happens to what you are describing in UA. You mean the up and the back? And that's, that's part of a trending stock. It's just the way it is. Stocks, just because you buy a stock doesn't mean it's going to go up. It has to putz around for a while, and then, it works out if it works out. There's no way to know, when you buy the stock, is it going to actually work out for you? Here's how I hedge my bet on stocks. And let's just take this one. You see this run up and you see this pullback. This is where I'm interested now. And I think by doing that, you hedge your bet a little bit. So now I'm looking for follow through, because this is like a launch pad, this type of chart pattern. Up, back. That is, you go take a look at, go find a chart that you look at and you think, man, I wish I would have bought that chart down here. Just stop right there for a second. Just stop right there. And now look at this chart and look how many times this chart pattern was created. Just look at that. Look for that chart pattern in that chart and look how many times that was created. That would be how many times you could have bought that chart. So this is why I want to look at these charts. I want to look at this type of chart pattern, because now I'm looking at this as a launch pad, and up we go. Now, I'm not saying it's going to go up here. I don't need it to go up here. Remember, I just want to double my money. I might only need for this to go to that level right there. That's it. Some people are going to look at this. Well, this looks like it has a ride all the way to 2280. It might. But based on this chart pattern here, which I think is looking good, support, see how it was resistance over here? That's a nice looking chart now. Now I'm looking for it to move up, and it might only have to go to $20.36, and I've made my goal 2, maybe 3 times over. So anyway, I'm not sure. I know what you're trying to say, similar to UA. I'm not sure if you meant on this candle necessarily, or this candle, or exactly where. This is why, all I can say is, this is why I want to see this rally and pullback. Neither this candle nor this candle gave us the pullback and buy signal. These two candles gave us the pullback. This is giving us the buy signal. Thanks, Reggie. See, Brett, would love your insight on MIK. Bullish. At first glance, I'm going to say bullish. Let's get rid of that blue line up there. Yeah, at first glance, I'm going to say bullish. So here we have a bullish engulf, and we have this candle over here, and you see how that they're kind of right at that same level, and there's also a fair amount of resistance in here. Okay, so we know that. So and can somebody draw me a line down below so we be done, please? Pretty please, thank you. So I'm looking at this chart, and now I'm ready to stop looking here. Now I'm ready to look at, well, what can this chart do for me? What can it do for me? And, there are tons of ways that you can look for where this chart is going. First thing I'm going to do is look at a weekly chart just to see if there's anything on the left. This is one of the, I think, the most easiest and basic ways to look to see what a chart can do for you. So let's come over here, and I'm going to put a line right there, because that looks like a place that it might want to go to. And then let's just go right here, and I think that's plenty good. Also, let's take note, we're at a resistance area. Okay, let's take note of that. We're at a resistance. Very important to take note of that. Now let's go back to the daily. So remember, bullish candles like this, they're the clues. This is not the reversal candle. It's not a reversal candle till it actually reverses. And it has not reversed yet. So we really can't call this a reversal candle. So can you see how a new trader that gets an ebook in his email or buys a book and they show charts that you see a bullish engulf that runs up and they refer to this as a reversal candle? Can you see how new traders might misinterpret this? And see, that's one of my bugaboos about candlesticks and how we talk about them. It's only a reversal candle if it reverses. If it doesn't, it's nothing. So this is a reversal clue, not a reversal candle in my mind. So I see this up here. I see this resistant. And remember, we looked at this on a weekly chart. This is clearly a resistance line. So how about we do this? How about we let this chart break out? And how about we trade this chart on the breakout? And how about we look at this chart pattern like this? Break out, and then look for that test or that inside day, something like that. Something right in there for an entry. Now, can we make money? Now, I think this is a first good area it might go. I think that's a good second area it might go. So let's just drop a pin right here. You buy it, say, approximately $11.16. Would you like to have 16.5%? Would you like to have 46.5%? I'm guessing your answer is yes. That's how I would trade this. That's your clue. In fact, as you're flipping through charts, let's see, anybody that flips through charts, you're flipping through charts like this. You know what? You stop at a chart like this. You stop because you see this candle. Oh, I'm going to stop because you see this candle. These are clues. You're flipping through charts. Whoa, you stop at this candle. And then what happens is you go evaluate the rest of it. Well, maybe yes, maybe no. I don't know. This as you flip, that's what you're looking for. These are clues. So we want to look for those clues. We want to look for those chart setups that, like this one right here. See, this is the kind of chart I get excited about. Or Roku. We looked at Roku earlier. That's one I'm kind of looking at. But look how this rallied up and has pulled back. There's my clue. It's ready to rally up again. So space. Because of the space, this is a good candle, but now I want to look at the rest of it. So on that other chart, like I said, on that breakout, I think that would be a good way to trade that. Emily, you're welcome. Do gaps usually fill? Oh boy. Just a second. I had to drink some water. Okay. I'm laughing because I've been in so many battles over this conversation with people. It's just insane. In fact, the people I get in battles with, we usually give up and just say, let's agree to disagree. I hear some traders say that gaps have to fill, and I'm okay with that until they use the word have to. No, stocks do not have to do anything. No, the gap does not have to fill. Gaps fill because traders trade the chart up and down, and sooner or later that gap gets filled, not because it has to fill. So, in my opinion, no, gaps do not have to fill. But somebody else could make the argument the other way. You wrote gaps usually fill. They usually fill because charts go up and down. Up and down, up and down, up and down, up and down. And sooner or later, it's going to go down and grab that gap. So I'm going to say yes to your question. They do usually fill, but that's because it's the nature of a chart to go up and down, up and down, up and down. Not because, let's say space. Here. And this is where I usually shut down my opponent when I'm talking about this. So space, let's rocket ship, man. Boom, 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 boom. Okay. So do you think space gets way up here and it says, holy crap, Batman? Sheesh, let's get down here and fill that gap. Seriously? And that's usually where my opponent on this conversation, they really don't say anything because they realize I just proved my point. So anyway, yes, they usually fill over a long time. Okay. Jamie, Hans, try to keep your account size small and lower your position size till you can improve your win-loss. Good point, Jamie. Thank you. Yeah. So here's something I tell folks. If you are struggling with trading, stop trading. And I'm dead serious about that. I'm dead serious about that. Stop trading. Okay? So here's what I mean. And Jamie nailed it. Jamie nailed it. So what you do is you look at a chart. You like that chart? Well, buy one share. All right? Buy one share. That's it. You know, if whoever you trade with says, well, you have to buy a minimum of 5, okay, buy 5. Buy 5 shares. Look, you're not going to lose, or you're not going to make any money. You won't. And if you do, well, I don't think you are. If you do, you're doing something wrong if you do. But you're not going to lose money. And what you're going to do is you're going to go through the mechanics of trading, and you're going to practice trading with real money, because everybody that trades with a paper account makes money. It's crazy. Everybody's a winner with a paper account. The minute you go to a money account, you start losing money. Just the real world. So trade with 5 shares. Trade with 1 share. It's going to cost you, but it's the cheapest education you'll ever get in your life. It will be the cheapest education you will ever get in your life for anything. And just learn the mechanics of trading. Learn to take profits at wherever your plan says. Learn to put that stop in and abide by that stop. And that I think will improve your trading. And like I said, Jamie nailed it. 1 million. Yeah, very hard account to double there, Gwen, I think. And that was 1 million up there. Okay. Very hard account to double. It really, really is. Let me ask you this, Gwen, though. Would you be happy to make $250,000 in a year? Well, you should get together sometime, maybe. David, my first HRC webinar, awesome group, serious questions, love it. Thank you, David. Thank you very much. From a futures trader, thanks. Let's see. I simulated with a $70,000 account. That's what I will be trading when I go live. I had 3 trades on today. By the end of the day, they collectively added up to $385. Congratulations. I took the money and ran. Perfect. Especially in this market. Well done. Very well done. 385 is your daily goal. That's a good goal. $70,000. That's good. That's very good. I read that you can get 100,000 out of 1 million and wire out your profits every week and set yourself back to square one again following the week to set up a growing account. That's a good idea too, Mel. Yeah. No, David, I do not use fractals. Oh, wow, that's 100. Yeah, I agree with Nigel. That's pretty good there if you can do it. That's excellent. Preach. Don't get me started. Sorry, Gwen. Sorry, Gwen. A million, I said 100,000, Gwen. Pen long. Let me talk about pen. Pin is my arch enemy right now because I am long pin. And I've held pin. Good idea, bad idea, I don't know. I am not green on pin, by the way. Pin today did very well, and I'm very, very happy with pin. Buy box between 64.85. Let's see where that is. 64. I agree with the lower one. Yes. And what was the higher one? 70.25. Well, that's just about where I've got it, and totally agree with that. Totally agree. Like I said, I'm long. Tomorrow, or the next day, it doesn't have to be tomorrow. But if we see follow through, then I am likely to add to pin. And that'll help me get greener faster. But yeah, pin still looks good to me. 2-day chart, 3-day chart, 4-day, 5-day. Pin still looks good. It just pulled back a bit more than I was really expecting and what I really wanted. WKHS ranging, yeah, it's just moving sideways right now. That's why I think it needs to break out before we do any kind of buying. And there certainly is no reason to buy it right now. WKHS, try that again. WKHS, there we go. I mean, there's absolutely no buy pattern in here, absolutely no buy signal in here, absolutely no reason to be a buyer in here. Only when it breaks out, in my opinion. I suppose if it did something like this, if it did something like that, okay, I might have to rethink the buying up here. I might have to consider the buy, going in late in the day, or maybe consolidation the next day, something like that. But yeah. Let's see, George. If when the Dems take all three branches of the government, a financial transaction tax is very likely. Biden wants 1% per year to that, blah, blah. What would this do to the markets? George, it's not going to do anything to the markets, okay? It's not going to do a doggone thing. The market is still going to be the market. Are we going to have a knee-jerk reaction? And it doesn't matter who wins, okay? So it doesn't matter who. I believe there will be a knee-jerk reaction one way or the other. If we jerk up, you're going to see a jerk down. If you jerk down, you're going to see a jerk back up. So the market will be the market. Nothing is going to change. Nothing at all will change. Here's the SPY. Here's a monthly chart. Here's a quarterly chart. Here's 1988. Nothing has changed. The market is still the market. Wall Street will be Wall Street. Vanilla ice cream will be vanilla ice cream. Okay? And that's truly what I think. There'll be that knee jerk, but after that, we'll get right back into the market. So, truly, truly what I think. Not to mention a rise in capital gain tax. Yeah. Can you please look at CRSR? Sure. Is this the right one? I want to make sure this is the right one. CRSR. I looked at it. Now can we move on? You really don't want me to tell you what I think of this chart. It won't be nice. So why don't we just leave it at that? First thing, Glamour, I don't know anything about you, okay? Maybe you've been trading for 40 years, and maybe you've been trading on your own and making money for 40 years. I don't know. Maybe, I don't know. Did you just start trading 3 weeks ago? I don't know. I don't know these things. I think trading IPOs is a bad idea. I really, really do. There's no history here. There's nothing there. Out of all the charts you could possibly trade in the stock market, this is what we want to look at. I just don't think that's a good idea. So, how are you going to trade it? What are you going to do? If it breaks out, you're bullish. If it breaks down, you're bearish. There you go. Whoops, wrong one. That's the best thing I could probably do for that. Sorry. Hello, Adam. Oh, Adam from Alaska. I know which Adam this is. How you doing? How you doing? David. Thanks for the line, Fred. Rick, I've traded futures and FX for years using Thinkorswim. Do you have to use TT2000 to participate in HRC? No, sir, you do not. I would venture to bet that I would venture the bet that a very large group of traders with hit and run candlesticks or right way options, we kind of work together, use Thinkorswim, and I think a large group uses TC2000. And then there's various others out there, but I think the largest two are Thinkorswim and TC2000. I have nothing but good to say about Thinkorswim. I choose TC2000 just because I've used it for years. I think it's a great charting program, but Thinkorswim is top notch. Top notch. Okay, folks, let's call it a night here. Let's not leave it there because, we don't want to leave it there. So tomorrow, the way I see it is, let's go back to this 3-bar chart. We're facing a gap to the downside. So we've got a trend that's moving down. So just like always, what do we need to do with that trend? We need to break out of that trend to be bullish. So we need to break to the upside to be bullish, or basically break out of the high of the most recent candle. If we continue to the downside, below this 349.13 or that low those lows right there, then I think there is a very good possibility that we come back down and test something like that right in there, and we get into that gap. And of course, if that continues, if we continue the same old thing, say down, and maybe we get a rally up, if we hit that fail, we pop down, there we are again. We might get down in and test into here. So we need those bulls to step up. We really do. One of the most important charts that I think that we should follow, I've been saying this for some time, and I still believe it, is FNGU. It's the big boys, the big FANG stocks, the big NASDAQ stocks that have been leading this market. And when they stop leading, the market is going to feel a little bit of pain. I do not believe that the rest of the market has caught up yet to make the switch. And right now, everything is all about the NASDAQ, the Qs. Everything is about that right now. So I think those are the charts to keep an eye on. They don't have to be the charts you trade, but that's the charts that controls the market. All right, folks, you guys have a wonderful day. Thank you so very much for being here. Thanks for all the questions, and let's just trade safe. Let's trade safe going into the next 3 weeks, okay? You guys take care. Have a great night.